So how is the Singapore technology sector doing? Right, so over the past 1 to 2 months, we have seen a variety of actions in the Singapore technology stocks like AEM, Frencken, UMS, even Innotek, even ISDN as well. Some of those stocks we have covered in several videos over the past few months. So there are several varied actions. Some of them have continued to push up really strongly. Some of them have pushed up and then profit taking came back, and some of them are just pretty much moving sideways, right? So in today's video, we'll look at the Singapore technology sector. We look at a few stocks. I try to cover as much as possible, but we'll pretty much look at these 4 to 5 main stocks: AEM, Frencken, UMS, Innotek, and maybe one bonus stock at the end called ISDN, which I've covered previously as well. So if you're looking at the Singapore technology sector, you definitely want to watch this video all the way to the end, because I'm going to look through some of the key levels that have kind of like turned out over the past few weeks that have came out. I mean, in terms of like new support, new resistance level whereby selling is starting to come back, and then you can also think about taking some profits as well. All right, so this will all be covered in today's video. Let's dive into it right now. Okay, so the first stock I would like to talk about would be this company called AEM, right? One of the leaders in the Singapore technology sector. But this company has been pretty much moving sideways, I would say, over the past 1 to 2 months, not much of a move. So let's dive into the charts and explain to you where we are right now. So you can see we are currently trading at about $4.08, right? $4.08. This is pretty much the range for now, all right? We were actually consolidating below the $4 to $3.90 level, all right? And we kind of broke back above the $3.90 and $4, and this is pretty much the consolidation range for now, with support being at about $3.90. Look at this right here. $3.90 would be the immediate support for AEM. You can see over the past 3 weeks to a month, we've kind of like traded higher, came back down, a few good bullish reversal candles right here, something like what we call a hammer right at this support level, and it kind of like rebounded from 390 all the way to about 420, 425, and then sellers came back, and it's pretty much right in the center right here. So this is the range for now for AEM. Support is quite clearly about $3.90. Resistance somewhere around at 420. Maybe you want to give a bit of leeway, will be around at 420 to 425. That is where you can see since like April, we have been like selling down, right? Kind of like hitting there, a little bearish candle, came back down, we rebounded, came back down, came back down, came back down, about 3 to 4 times, kind of like hitting towards the 420 to 425, and then sellers came back to push prices back down. So I think if you're looking at AEM, if you're holding on to, it right now, maybe right the recovery, you can also think about getting out, maybe like 420, near 420, 425. That could be a good level to kind of get out first, maybe wait for a pullback, and that's where you can think about loading up again. All right, but in terms of the support wise, 390 is a really good support. It was originally the resistance turned support, and yes, we have kind of rebounded from it just about 2 weeks back again in July. All right, and this is also where the longer term moving average is. Look at this, right? The red line, the 100 days moving average is what we call the red line. Of course, the blue line is the 200 days moving average. So these two lines are pretty much, I would say, a bit pointing up, a bit flattening out, but at least both of them are still looking good in terms of prices being above the longer term moving average line. So trend wise, in the long term, I think it still looks okay. Just that, in the short term, we might still see a bit of profit taking, pushing up and then sellers coming back again. But in the long term, I think it still looks okay, especially if we can hold above this like 390 level, which is where the 100 days moving average line. So let me just go to draw some targets so at least you can see clearer. That would be the range for now, all right, for AEM from 390 all the way to like about 420, 425, and that's where we can expect some selling to come back, right? But the long term, it looks okay, and also the red line, 100 days moving average, is also pointing up and still slightly above the blue line. So that's a good sign of the mid to long term trend still pretty much intact in terms of the upwards direction, right? So this is AEM. Okay, so next technology stock I'll talk about would be this company called Frencken, right? So Frencken is one of those really good, I would say, very strong uptrending stock. I've covered it many times in several videos, and it's really looking good. It's one of those that has been like pushing higher, whereas for AEM it's like just moving a bit of sideways, right? So Frencken has been like just pushing higher, trying to find new highs, trying to find like a new higher consolidation phase, right? And this is where we are right now at about $2.25 right here, right? So you can see that over the past 2 to 3 months, we were actually consolidating consolidating below this really critical level, about 190. All right, 190 to $2. You can see this is where it was consolidating up, down, and eventually, right, on this day, just about 5th of August, as we began August, it broke that $2. It kind of broke that $2, right? Buyers just started to come back out fast, right? From 202, 203, 204, it just started to push up all the way, like I would say more than 10%, right? More than 10% in just one day as they approach this about 225, 230, and that's where some selling started to happen. All right, so this is Frencken right here. I would say one of those really good long-term uptrending counter that you can think about, you know, kind of getting in on dips. Right now, support-wise would be at about $2.10. So I was thinking about $2 would be a really strong support, but now it's not even $2, right? I think somewhere around $2.10. Like today, we kind of traded to about 210, and then buyers came back up, you know, and started to come back in and bargain hard and started to rebound all the way from 210 to like about 230, and then, you know, sellers came back and took some profit, right? Which is normal. Quite a good rebound today by about 8 to 9%. So that is where, you know, people might want to take some profit as well. Nothing wrong with that. All right. So I think if you're kind of like you know, still holding on to Frencken, you can also think about, you know, make sure you lock in your profits, you know, as you approach some of those resistance like the 230, maybe the 250 level as well. I think after 230, that would be the next upside target from 230 all the way to 250. That is where we can potentially see a bit more upside after 230. But right now, 2.30, that is the immediate resistance whereby sellers are coming back. So hopefully, I mean, we do see a bit of profit taking. You might, you know, kind of retrace back down again, and that's a good opportunity to kind of load up to get in again. Anything above $2 to 210, I think the uptrend really looks intact. All right, looks intact. Look at this, the 20 days moving average line. This green line right here also coincides with the $2 mark, right? So that is kind of like points towards a bit of a good short-term uptrend as well, right? And of course, for the longer term, it looks good as well. Both the red and the blue line, they're both pointing up, all right, pointing to a really good mid to long-term uptrend. All right, so this is Frencken, and you know, from the system, so I have like a system called the 1GT system, and you know, for Frencken, we actually have a couple of good bullish signals coming out, and maybe just let me show you this signal from Frencken right here. All right, and this is Frencken. So actually, we did have a couple of bullish signals for Frencken. I think somewhere in May, started to push up, we got an exit, we got a new bullish signal somewhere in June, right? So 23rd of June, which is like about 2 months back. All right, got a bullish signal, started to consolidate, and then the move really started, and we are like somewhere around that 225, 230 right now. So there are still no exits, right? You can see there's still no exits for Frencken right now. So yeah, I think we might consolidate, as I say, from maybe 210 to 230. That would be the range as we consolidate, and maybe we push higher, we break the 230 to push higher to 250, and hopefully we see an exit there. It can be a good, you know, a guide to kind of like get out and take some profit as well. But what you want to do is to make sure you protect your profits. Let me just jump back to the chart. Right here. So yeah, you want to make sure you protect your profits. I think if you have like got in, you know, at any levels like from that 160, 180, 190 when we first covered it many months back, you are definitely making some money, right? So you definitely want to protect your profit in case prices were to, like, you know, break back down below the $2 or 210. You can think about, you know, kind of like just getting out, right? Locking your profits, have a stop loss to protect your profits, and you still make money. All right. So this is Frencken here, one of those really good, I would say, uptrending technology stock that definitely is still in my watch list to kind of load up against on any dips. Okay guys, so let's move on to the next counter, which will be UMS, right? So if you like this video, guys, go ahead to give me an early thumbs up. It will definitely help out the channel, and thank you so much for doing this, right? So let's dive into the next technology stock in Singapore, and that would be UMS. So I've also covered, you know, this counter a few months back, all right, in the video for the technology sector, and this company is also not too bad. Something like Frencken, one of those really good uptrending, you know, consolidating and then like pushing higher and then like consolidating again, which is healthy, right? We don't want to see prices just like pushing up every single day, or, you know, over the past 1-2 weeks. It can be really dangerous. So each time it consolidates is a good thing, because, you know, buyers are starting to come back up. It can be a new support level. So as it moves up, it's more steady rather than, you know, prices just moving up every single day and there's no clear support that's being found. All right, then that can be quite dangerous, right? That's where we can see like a very heavy pullback or selling. But as it consolidates and moves up, consolidates and move up, gentle, slowly consolidate, you know, like from 1 to 2 to 3 weeks or a month, that's a good thing. And then if you start to push up again, that can be a really healthy uptrend, right? And that's what we are seeing for UMS and also Frencken, which I just talked about just now. All right, so UMS, you can see right now trading at about $1.75, right? So where is the support level? I've kind of like drawn it for you. You can see that we were actually consolidating. I think when I covered it a few weeks back, we were actually consolidating just above the $1.50 mark. You can see 150 was a really critical resistance level. We kind of broke this $1.50, a psychological level as well. We broke this 150. Of course, then it was like an uptrend. We broke the 150, and of course, we had some upside targets that were drawn all the way to like 160 first, but it went up a bit more to about 165. And then it started to consolidate right here, right? Consolidate from 150 to 165. It went up, came back down, and then buyers came out, it started to rebound. And of course, eventually it broke this 165 level as well. So let me just, you can see what we can do is to extend this target, right? Just by shifting it up, right? You can see kind of like fits quite nicely, right? So we kind of broke that 165 and kind of like headed towards the 180, so like about a 0.15 cents, another range upwards where it consolidates. So this is pretty much what we are seeing just like last month as it consolidates from here now to here, right? And that is the range from now 165 to about $1.80. Maybe not even 165. Look at this, right? Only 170. Buyers are like starting to come back out already, right, near 170, because of course 165 will be a really strong support, because that was like the resistance, now turn support. And the 20 days, look at this, right, the green line is a 20 days moving average, is right here at the 165. So 165 is definitely a stronger support, but as I say, it seems like buyers are not even allowing to go near there, right, at about 170, and they're coming back up to kind of like a bargain hunt, and it kind of like rebounded, right? So but this would be the range for now for UMS. So still one of those really good uptrending counter, which you can definitely put in your watch list as well, all right, to get in on dips. I think if it does dip to this level near 170, 165, it can be a good opportunity to kind of load up again to catch the rebound to 180. Of course, if the 180 were to break out, that's where we can revise our targets higher, maybe to like 190 to $2. That's where we can see a bit more upside, right? So this is UMS right here. Also another good uptrending technology stock that you can put in your watch list as well. I almost forgot, right? So for the UMS, the thing is we also had like a bullish signal, a couple of bullish entry and exit signals from the one good trend system that I have. Right away, you can see somewhere in like May, we got a bullish exit, went up a bit, got an exit, and like another good green arrow pointing up in June, 23rd of June. That was where they really started. You can see we broke the 150 as I talked about, went all the way up here, we got an exit. And let me just zoom in right here for you, right? So this is the one that's most recent on the 30th of July, right? Which is the end of July, right? So yeah, end of July, we got a signal, went up, and we are somewhere around here right now. Alright, so there are no exits. So as I say, hopefully we break the 180. Alright, we break the 180. I think we can still probably have a bit more potential to push higher to like maybe $192, and we might see an exit coming out, and that could be a good signal to kind of take some profit and exit as well. So that's how like the system can also guide us to get out when it's time to get out as well. Okay, so let's move on to another Singapore technology stock I'll share with you, and this would be Innotek, INNOTEK, currently trading at about 0.875. So you can see Innotek is a bit different than UMS and Frencken to the chart, because I mean UMS and Frencken, as I say, very strong, pushing higher, trying to find new highs, and then consolidating and attempting to push higher again. But for Innotek, over the past, I would say 4 months, we have been just like moving sideways, right? Moving sideways, and you can see it from the moving averages, right? Look at this green line. This green line is the 20-day moving average. And you can see that it's just like moving sideways, right? Moving sideways, it's not really pointing up. I mean, it's like up a bit and down a bit, and then it's like just sideways, as you can see, since like April, May, and this is where we are consolidating in this range. All right, and when we are consolidating, you can see that the longer term, I think the longer term trend still looks okay, right? But just that for the short term, we are pretty much in this consolidation phase from 0.85 to about that 95 to the critical $1. That would be this range that we've seen over the past 3 to 4 months. 85 cents is a good support for now. I think we have kind of rebounded it from like about since like May 1, 2, 3, 4, 5. I think today we kind of sold off as well. I think some of the technology stocks has sold off as well. Right, so we kind of sold off to the 85 cents here. Right, so this is like a bar today, right? We kind of sold off, we broke that 90 cents, came down to about 85, and you can see buyers starting to come back up. Buyers starting to come back up right at the 85 cents mark, just like how we have rebounded in May. You can see a really good bullish candle right here, a long lower shadow we call it, which means it's something like a hammer, all right, whereby buyers kind of like came back at the day end. So in the morning, it kind of like sold off to like 80, 85, and then it's like a red bar down. But at the day end, which is like in the afternoon or after lunch, buyers came back up and pushed prices back up from like 84, 85 back to about 875 right now. So that's quite a good candle, I would say, quite a bullish reversal candle, especially if we see it at a support level. I mean, if we see it at like 90 cents or what, then doesn't really make sense, but we see it at that 85 cents right here, right at this 85 cent level, which we have rebounded like 3 or 4 times since April. So when we see it again, it can show that buyers are pretty much serious about defending this 85 cents level. Make sense, right? So that is what we're seeing right now. Of course, it's only one day, so we need a few more days to take a look at it. I mean, to see what it says next week. All right, if we might kind of like approach here again, and then buyers kind of like push it up again, like what we're seeing over here when it rebounded, then that's a good sign that this 85 cents level would most likely hold. It can be affirmed as a good support level, whereby we might see the rebound happening all the way back to like 90. 90 would be a bit of a psychological resistance level right here. You see, this is where the 20 days moving average is as well. So of course, if we break 90, it's back to the 95 cents. So 95 cents is a bit of a resistance as well. You can see over the past like 1 month, since early July to now, we have been like touching, came back down, touching, came back down. So that is the range, 85 to 95. And of course, the most critical one would be the $1 level. So that is the range for Innotek. I would say slightly a bit more of a consolidation, not really attempting to push higher like UMS and Frencken, but I think it still looks good above the 85 cents, whereby buyers are still trying to come back up to bargain hunt on dips, and that's where a potential rebound can still continue. Right, so this is Innotek right here. Okay, so another technology stock like share view would be ISDN as well. All right, and today we kind of like see quite a heavy sell down in ISDN, about 0.735. So it was actually one of those good uptrending counters as well. You can see we pushed up, we broke the 80 cents, went up to 85, and for like a week plus, we were actually consolidating from like 80 to 85 cents right here. So 80 cents was like a kind of like a temporary psychological support level. 80 to 85 is like a 5 cents range, up, down. But unfortunately today, we kind of broke these 80 cents, and sellers started to come back out, all right, and kind of like pushing it all the way to around that 70 cents level. That is where we are seeing some support. So I would say right now, 72 cents, right, 0.70, I mean 72 or 70, I think just around there, 72 would be a really good support level. That is where we can see we have been holding all this while since June, July, rebounded. You can see quite a good bullish candle here. Prices started to rebound really fast. So now we are back to this support level. So let me just go ahead to draw what we call the upside rebound potential targets. That would be it. All right, from 72 all the way potentially up to that 80 cents first. Of course, 80 cents, if we get past that as well, then it will be back to the 85 cents. That would be the support for now. All right, so for ISDN, you can see that in terms of the longer term trend, I've covered this counter as well previously. And in terms of the red line and the blue line, the red line is still sloping upwards, the blue line is sloping upwards as well. So mid to long term trend, I think it still looks okay. But in terms of the short term, this counter can be a little bit more volatile, right? Compared to like, my favorites like Frencken and UMS. This counter is a bit more volatile. So you can, a very, very gentle longer term uptrend, but for short term, you can like just move up and suddenly you can just, tank down and gap down and then start to recover a bit, right? So it can be a bit more volatile in terms of the price movement as it consolidates slowly upwards. So just take note of it, right? But right now, it could be a good opportunity, all right? It could be a good opportunity to get back in again, especially if you have like got out, around 85. I think it can be a good opportunity near 70, 72. This is where the channel support line is. So you can see I've kind of like drawn this green line. Look at this green line right here. All right, this green line is what we call an upward sloping channel support line, and the prices have been like rebounding above this upward sloping channel support line that connects all the lows, all right, over the past 1 year plus, right? So higher lows, that's a good sign of the uptrend. So that's another thing that we can affirm the trend apart from the moving average. And you can see this is where the green channel support line is. It's kind of like approaching it as well. But of course, we give a bit more weight to the horizontal support level, as I say, from 70 to 72. That is where we can potentially see a bit of rebound, right? So that is for ISDN. I would say still looks okay in terms of the longer term trend. It looks okay, but short term, be sold off, it could be a good opportunity to kind of time your entry to get in again near the 70 to 72 cents. I think if these two support levels still hold, that is where we can potentially see a rebound all the way to 80 and then to that 85 cents, right? So this is a ISDN. All right, guys, so there we have it. I pretty much covered most of the stocks that I've talked about previously on the Singapore technology sector. So we have like AEM, Frencken, UMS, Innotek and ISDN. So I have a lot of people asking me over the past 1 to 2 weeks, or some of my clients asking me as well, what do I think about like Frencken and UMS, and maybe some of them that have tanked down like ISDN, and that's why I thought, why not just do a video covering all the technology stocks. So if you're holding on to any one of them, I think you kind of like have a better idea on what are the levels in terms of the support, the level, the resistance, where you have dropped to, and how you can try to time your entry to get in again. Alright, so I hope this video has served you well in terms of the Singapore technology stock, and I hope you like this video. If you have, go ahead to smash the like button if you've not yet done so. Give me a like, or give me a like, and of course smash the subscribe button so that you will not miss out on any new videos like this. Alright, so thank you so much for watching, and also just let me know in the comments below. What are your thoughts on this technology stocks that I talk about, right? What are your thoughts on it, like AEM or maybe like Frencken or UMS? Which do you think are better ones, right, to kind of like get in right now? Which do you think the uptrend, it looks really awesome, right? So let me know in the comments below, and that's where I'll do my best to kind of reply your comments one by one. All right, so thank you so much for watching. Joey here. I look forward to see you in the next video.